and a very good morning to all our listeners and viewers tuning into Stock Sense. I'm Malik and you're with us for your daily dive into the Pakistan Stock Exchange. It's Tuesday, November 18th, 2025, and we're here to bring you all the essential updates you need to start your trading day informed. Let's kick things off with a look at yesterday's market performance. The KSE-100 index experienced a slight dip, closing down by about 248 points, or just under 0.2%, to settle at 161,687. This marks a small pullback after Friday's positive close, which saw the index gain around 1,277 points. What's particularly interesting is the significant increase in trading activity. Yesterday, the main board saw a staggering volume of over 1.2 billion shares traded, valued at more than 41 billion rupees. This is a substantial jump compared to Friday's volume of about 240 million shares, indicating strong participation even on a slightly negative day. Market breadth was leaning towards advancers, with 253 companies gaining, 192 declining, and 36 remaining unchanged. Now, turning our attention to the sectors that had the most impact on the market. Yesterday, we saw automobile assemblers exert significant downward pressure on the index, pulling it down by a notable margin. Commercial banks also contributed to the market's decline, though to a lesser extent. On a more positive note, the power generation and distribution sector provided some much-needed upward momentum, offering a partial offset to the broader market's slight downturn. From a technical perspective, the KSE-100 appears to be holding a generally positive sentiment, according to the daily technical analysis. Most of the moving averages, both short and long-term, are signaling a buy action, suggesting an underlying bullish trend. However, some shorter-term indicators might show mixed signals, so it's worth keeping an eye on them. For key levels, the classic pivot point sits around 162,650. On the upside, initial resistance can be found around 168,970, while support is noted around the 155,310 mark. Moving on to corporate announcements. For those eyeing distributions, today, November 18th, is the last day of entitlement for several companies. If you wish to be eligible for the announced distributions, you need to purchase shares of Sui Southern Gas Company Limited for its 5% final dividend, LSE Ventures Limited for its 10% final dividend, and BRR Guardian Limited for its 5% final dividend. Additionally, investors should note that Jahangir Siddiqui & Co. Limited has its book closure starting today for an annual general meeting scheduled for November 25th. There are no board meetings scheduled for today that we're tracking. In macro developments, the economic landscape presents a mixed picture. We're seeing news that the maiden session of the 11th National Finance Commission has been delayed once again. This ongoing postponement of discussions around resource sharing between the federal and provincial governments, especially amid a downward revision in economic growth forecasts, could create some uncertainty in the market. Furthermore, Pakistan's current account recorded a deficit of about $112 million in October 2025, which is a key economic indicator to monitor. On a more positive note, the Prime Minister recently inaugurated upgraded facilities at Karachi's Kant Station and the Shalimar Express, highlighting efforts to modernize Pakistan railways, which could have long-term economic benefits. There's also news about Gwadar banning vehicles carrying Iranian oil, a move aimed at curbing fuel smuggling and bolstering the formal economy. When we look at institutional flows for yesterday, November 17th, foreign institutional investors were net sellers, offloading about $1.2 million worth of equities. However, this outflow was largely absorbed by local institutional investors who were net buyers by roughly the same amount. Diving deeper into the local flows, banks and development financial institutions were significant net buyers, adding about $14 million to their portfolios. Individual investors also showed buying interest with a net inflow of nearly $3.9 million. On the selling side, mutual funds were notable net sellers with an outflow of over $11 million, followed by companies and insurance companies, which also shed some holdings. This indicates a diverse range of strategies among different investor categories. My take for today is that while the KSE-100 experienced a minor correction yesterday, the substantially higher trading volume suggests that market participants remain engaged. The slight foreign selling was comfortably offset by local buying, particularly from banks, indicating underlying confidence from certain segments. However, the macroeconomic news, specifically the delay in the NFC meeting and the current account deficit, introduce elements of caution. These factors could keep investors on their toes, looking for clearer policy direction and economic stability. As always, fundamental analysis combined with careful monitoring of these broader economic signals will be crucial for navigating the market in the coming days. That's all for today's Stock Sense Morning Brief. Thank you for joining me, Malik. We'll be back tomorrow with another update to help you stay ahead in the market. Until then, trade wisely and have a profitable day.